Studies Section 6, Final Account of Manufacturing Company. Introduction. In preparing final accounts, we have assumed that the business only buys and resells goods. However, in practice, some businesses manufacture their products before they are sold to the public. The final account manufacturing company starts from manufacturing accounts. The main purpose of preparing manufacturing account is to ascertain the cost of the goods manufactured. You can also ascertain manufacturing profit, if any, from the manufacturing account. We will explain how to prepare manufacturing accounts in this study section. Objective. At the end of this study section, you should be able to prepare final accounts of a manufacturing company, including manufacturing, trading, profit and loss account, and balance sheet. Pretest. 1. Within the context of a typical manufacturing account, give the composition of the following: A. Prime cost. B. Factory cost of production. C. Total cost. 2. Give examples of the composition of the various costs to illustrate your answer. Content. A. Nature of the manufacturing accounts. You will agree that a manufacturing organization will acquire materials, enough labor, and other inputs necessary to change the raw materials into finished goods. Therefore, cost of production will include cost of materials, cost of labor, and cost of other expenses. Costs that you can directly trace to units produced are direct costs. You will add the direct materials, direct labor, and direct expenses to get the prime cost. You will refer expenses which you cannot trace directly to unit produced as overheads. Manufacturing profit will arise when finished goods is transferred to trading account at market value. In manufacturing account, you will encounter different types of stocks. There are stock of raw materials, stock of finished goods, and stock of work in progress. B. Cost of raw materials consumed. The calculation of the cost of raw materials consumed is similar to the calculation of the cost of goods sold in the trading account. You can obtain the cost of raw materials consumed as follows. Opening stock of raw materials. Add purchases of raw materials, carriage inward of raw materials. Less returns outward of raw materials. Less closing stock of raw materials, cost of raw materials consumed. C. Direct labor cost. This is the cost of labor which can be directly identified with the production. For example, in a textile company, the wage of the operator of the weaving machine is direct labor. Meanwhile, the remuneration of a factory supervisor or factory cleaner are indirect labor expenses. D. Direct expenses. These are other expenses specifically incurred on the units produced. These include cost of hiring a special plant or machine for production of a special order, cost of chemical materials different from direct raw materials, royalties paid per unit of output by the manufacturer. E. Format of manufacturing accounts. The format of a manufacturing account is summarized below. Manufacturing account for the year ended 31st December 2000 and so. In Naira. Opening stock of raw materials. To the right, transfer cost. Add purchases of raw materials. Add carriage inward of raw materials. Less closing stock of raw materials. Cost of raw materials consumed. Add direct wages. Add direct expenses, e.g. royalties. Prime cost. Factory overhead expenses. depreciation of plant and machinery, factory rent and rate, etc. Add opening WP, less closing WP, cost of production, manufacturing profit, if any. Example: global manufacturing company produces plastic materials. The information below gives the analysis of the cost incurred in the production for the month ended 31st October 2008. Stock as at 1st October 2008. Raw materials 2,400. Work in progress 800. Raw materials purchased 11,600. Production wages 2,000. Carriage inward on raw materials 400. Royalty 300. Other manufacturing expenses 600. Factory rent and rates 240. Stock as at 31st/10/2008. Raw materials 1,800. Work in progress 560. Additional information: 1. The company hired the plant at a cost of 1,000 naira. 2. The existing machinery valued 12,000 naira is to be depreciated at 10% per annum. You are required to prepare the manufacturing account of the company as at 31st October 2008. Solution: Global Manufacturing Company. Manufacturing account for the month ended 31st/10/2008. Opening stock of raw material 2,400. Purchases of raw materials 11,600. Carriage inward of raw material 400. Net purchase of raw materials 12,000. Cost of raw materials available 14,400. Closing stock of raw materials 1,800. Cost of raw materials consumed 12,600. Production wages 2,000. Direct expenses: cost of plant hiring 1,000. Royalty 1,100. Other manufacturing expenses 300. Added together gives 2,400. Prime cost 17,000. Factory overhead expenses: depreciation on machinery 100. Rent and rates 600. Power 240. Totaling 940. Plus the prime cost, making 17,940. Opening stock of WIP 800. Closing stock of WIP 560. Change in stock of WIP 240. Production cost of finished goods 18,180. On the right, production cost of finished goods C/D 18,180. Example 2. Assuming that the goods produced is transferred at market value of 20,000 in example 1 above, show the effect on the manufacturing accounts. Solution: Global Manufacturing Company manufacturing account for the month ended 31st/10/2008. Opening stock of raw material 2,400. Purchases of raw materials 11,600. Carriage inward of raw material 400. Net purchase of raw materials 12,000. Cost of raw materials available 14,400. Closing stock of raw materials 1,800. Cost of raw materials consumed 12,600. Production wages 2,000. Direct expenses. Cost of plant hiring 1,000. Royalty 1,100. Other manufacturing expenses 300, totaling 2,400. Prime cost 17,000 naira. Factory overhead expenses. Depreciation on machinery 100. Rent and rate 600. Power 240, making 940, plus the prime cost, totaling 17,940. Closing stock of WIP 560. Change in stock of WIP 240. Manufacturing profit 1,820. Total 20,000. On the right, market value of finished goods C/D 20,000. Example 3. The bookkeeper of Textiles PLC had extracted a trial balance but had not prepared the manufacturing and other final accounts of the company before he resigned. You are therefore approached to draw the final accounts of the company for the period. The trial balance is as presented below. Textile PLC, trial balance as at 31st March 2009. DRCR in Naira. Stock as at 28/2/2009. Raw materials 9,190. Work in progress 5,520. Finished goods 2,500. Manufacturing wages 800. Plant hiring cost 400. Purchases of raw materials 15,770. Carriage inward of raw materials 230. Plant and machinery 6,000 naira. 5,150. Office furniture as at 1/3/2009 1,200. Sundry expenses factory 200. Lighting 145. Rent and rate 300. Factory manager salaries 1,200. Administrative manager salaries 4,000. Sales commission 350. Loan from NII 10% 3,000. Bank charges 100. Discount received 280. Discount allowed 150. Factory power 220. Carried outwards 185. Sales 38,990. Debtors 660. Creditors 1,800. Cash 7,800. Bank 10,000. Drawings 8,000. Capital at 28/2/2009 30,000. Total on DR 74,070. Total on CR 74,070. Additional information. 1. Closing stocks, raw materials 8,000 naira, WIP 3,536, finished goods 2,490. 2. Provide for depreciation on plant and machinery and office furniture at 10% per annum on cost. 3. Apportion lighting expenses and rent and rate expenses in the following ratios. Factory 80%, administration 20%. Working notes. 1. Depreciation on plant and machinery is equal to 10/100 times 6,000 times 1/12 is equal to 50. 2. Factory lighting is equal to 80/100 times 145 is equal to 116. Office lighting is equal to 20/100 times 145 is equal to 29. 3. Factory rent and rates is equal to 80/100 times 300 is equal to 240. Office rent and rate is equal to 20/100 times 300 is equal to 60. Solution. Opening stock of raw material 9,190. Purchases of raw materials 15,770. Carriage inward of raw materials 230. Net purchase of raw materials 16,000. Cost of raw materials available 25,190. Closing stock of raw materials 8,000. Cost of raw material consumed 17,190. Manufacturing wages 800. Direct expenses plant hired 400. Prime cost 18,390. Factory overhead expenses. Depreciation on machinery 1. 50. Lighting 2. 116. Rent and rate 3. 240. Sundry expenses 200. Manager's salary 1,200. Power 220. Totaling 2,026. Add it to the prime cost, it gives 20,416. Opening stock of WIP 5,520. Closing stock of WIP 3,536. Change in stock of WIP 1,984. Production cost of finished goods 22,400. Opening stock of finished goods 2,500. Production cost of finished goods B/D 22,400. Cost of goods available for sale 24,900. Closing stock of finished goods 2,490. Cost of goods sold 22,410. Gross profit C/D 16,580. Total 38,990. Administrative expenses. Lighting 2, 29. Rent and rate 2, 60. Depreciation on office furniture 10. Manager's salary 4,000. Total 4,099. Selling and distributive expenses. Sales commission 350. Carriage outward 185. Making 535. Financial expenses. Interest on loan 25. Bank charges 100. Discount allowed 150. Total 275. Total operating expenses 4,909. Net profit 11,951. Total 16,860. Right. Gross profit B/D 16,580. Discount received 280. Making 16,860. Down. Textile PLC. Balance sheet as at 31st/3/2009. Capital 30,000. Add net profit 11,951. Total 41,951. Less drawings 8,000. Long-term liabilities. Loan 3,000. Current liabilities. Creditors 800. Accrued loan interest 25, making 825. Total 38,776. On the right, fixed assets. Plant and machinery 6,000. Less provision for depreciation 900, making 5,100 on subtraction. Office furniture 1,200. Less provision for depreciation 10, making 1,190 on subtraction. Total 6,290. Current assets. Stock, raw materials 8,000. WIP 3,536. Finished goods 2,490. Debtors 660. Bank 10,000. Cash 7,800. Making 32,486. Total 38,776. Summary. Manufacturing account is the account prepared to show the cost of the goods manufactured. It gives the analysis of the cost in terms of the prime cost, factory overhead expenses, and total manufacturing cost. Components of prime cost are direct materials, direct labor, and direct expenses. The stock of the partly completed goods is termed work in progress, WIP. The opening stock of WIP less the closing stock of WIP gives changes in WIP. The addition of the prime cost, factory overhead, and the change in WIP gives the total manufacturing cost. This is the end of studies section 6. Thanks for listening.